To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, Microessentials with fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching. But Microessentials is very different. Over time, microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only Microessentials with fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.
everyone. Welcome to the Red River Farm Network's Issues Center. We're so glad to have you joining us in person and online today. This is our Market Outlook Forum, and I'm going to introduce me. I'm Kara Hart, and Randy Conan's going to be joining me up here on stage, and he will get mic'd up, and we'll hear from him soon. We also have Red River Farm Network's Megan Overby and Jay Rader with us here today. And before we get started with today's Outlook session, a few things you should know. We welcome questions anytime. So anytime you have a question, just raise your hand. We'll get a microphone to you. Trust me, these market discussions go really, really well when you ask questions and can make it work for you and interact. I will also say, I mentioned that we have some folks viewing online. This is being live streamed today. Be sure to follow along. If there's something you want to see here today, like re-see, you can always go to YouTube and search your live event. That's who is videotaping our coverage today. And again, thanks for you all online who are joining in today's market panel discussion. Today, we've got West Central Ag Services, Randy Zimmerman joining us. Progressive Ag Marketing's Ray Grabanski, and we've got U.S. Commodities, Don Roose. Randy, all up to you.
Oh, okay. We just did the markets here, kind of a so-so back and forth, choppy type trading day today. Let's just talk about where these markets have come from following that last week's supply-demand report. We've had a couple of good days, a couple of not so good days, and just kind of back and forth. Who wants to start?
Well, I think when you look at the market, I think the real question mark that the trade has is we reacted positive to a negative report. Very similar last August, we did the same thing. So did we put our seasonal lows in on corn and soybeans? And I think that's the big debate, particularly after we had a strong rally on the corn and soybean market. Going into harvest, harvesting weekend put a little bit of a top on the cap on the market again today. But I think that's the real question mark, Randy.
Yeah, and I would add too. We got a bullish reaction to a bearish report, and we had a couple of really good days this week too, especially in corn. Monday, Tuesday, and Wednesday, and here we are Thursday. Not much happened. I guess we're down a little bit, but corn has actually recovered nicely. And the best thing is we've beaten the crap out of the people who sold a negative report early in the day on Friday. So the key question is, once we end this week, will we keep pushing that market higher? Don, you mentioned earlier talking about lighter test weight corn and some disappointing yields over there in the eastern corn belt, where that's supposed to be so good over there to offset this northwestern corn belt that had all the drought. So we'll have to see if that carries through to all the crop or if it's just the early harvest.
Yeah, that's a good question. I mean, and that's really the debate. Is it going to be similar to last year or not? And then is the demand going to pick up strong where last year it did? And both of those questions I think we're going to answer here over the next week or two.
Sure. Randy, you deal more with the cash side of things and farmers. You made a comment to me that I kind of thought you can make sense because we're not seeing corn piles around. We're not seeing a lot. Is there enough grain yet in farmers' hands, or is it gone?
Well, I think pretty much in our area the grain is gone. I mean, when they had opportunities this summer to move the grain, they took that opportunity and then liquidated. And they should have. Prices were good, basis levels were good, and it makes me wonder where we're at, coming into this quarterly stocks report of is the 165 out there and the 1.1 billion bushels of corn, is that really out there or is it less than that?
So
Yep.
I wonder, you mentioned, we know we have an interesting crop here in the West. Have any of you heard how some of the harvest is going along here in the North?
Well, in our area, we're chugging along on soybeans. It's all over the board as far as yields on soybeans, depending on previous crop, moisture that they've gotten, hit or miss, anywhere from 15 to 60 bushel beans we've heard. So it's really a case of all over the board. I know that we've already taken in about 2 million bushels of soybeans off the field, which is a good start, and we hope to do a lot more in the near future.
Ray, have you heard?
I think, actually, I'd echo the exact same thing that he mentioned, the variability, because we got really light soils and no rain from mid-July, or all the way June and July to mid-August. decimated that light soil, so the yields are very low there. The heavier ground that hung on had some subsoil moisture all the way to mid-August, and then they got the rain. You can resuscitate things and actually fill it out. But there were beans that were dead by that time, so they were done. You know, I want to back up a little bit and where we've been and where we're going in a little broader picture. On August 31st last year, corn was trading 307. 307. Okay? We took corn up to 770 on the May contract in, April, May, made her high. And he mentioned all of those grain bins were emptied out of corn. We have no inventory left. Great decision, because that 770 corn, if you held it till now, is now off the December contract at 530 or so. So, there's been quite a change in the market. And right now we have new crop, Dees 22 corn, which is about 10 cents from its high, all-time high, in the past few years that it's been trading. And we're trading it at 510 or so. So we went from 307 for cash corn. Now we have 507, 510 for next year's Dees 22. The shortage we have this year, we're not going to have enough corn in this area, and our basis could skyrocket for 21 corn. But what about 22? Anything's possible in 22 at this point yet.
Well, and I think, when you're talking about 22, I think there's a real debate out in the industry. Are we into a new price level? Have we ratcheted up, where we traded $1 to $2 for a while, then $2 to $3, then $3 to $4? Are we in a new era of 4 to 5? Well, the farmland values have skyrocketed. All these other inputs have skyrocketed. So, is that really going to be the case? Or are we going to go back into the old norms that we've been over the last several years? And I think that's what we're trying to sort out. But I think what you're alluding to, that's why until you can figure this out, you do have to do some kind of risk management and make sure that you're on top of that, because we just don't know yet.
Don, tell us more about the crops in the Eastern Corn Belt.
Well, yeah, I think when you look at the Eastern Corn Belt over in Indiana, I mean, it's variable again, but we've got people over in Indiana and their yields. One of the people took out 400 bushels or 400 acres. Usually they get 200 bushel an acre yield. They usually put fungicide on it. They weren't able to make it with these fields, and they ended up with 252. Then we're hearing lighter test weights in some of the areas over in Illinois. Last year, that was our big problem. Remember, we sell weight, not kernels, and we just didn't have the weight last year. Hot, dry towards the end. The same thing happened there. Looking for big yields over in Illinois, 214. But as you jump across the Mississippi over into eastern Iowa, we ran into one of our large client that he usually very good. Usually averages about 220 on corn. Hot, dry area on good ground, 145 to 165. So I'm just telling you, it is really, really tough on this early go to figure it out.
So a question I hear a lot as we talk about the markets, and I think a question that a lot of analysts may be still asking, will the Eastern Corn Belt crop offset the losses we're seeing in the West? Based on what we've heard, do we have a clearer picture of that right now?
Well, I think one of the most confusing things that we have, and all of us are the same up here, is you look at the government, trying to figure out the government to tell us where the yield are, and we look at good to excellent rating, and we concentrate on this like it's no tomorrow. The good to excellent ratings are actually lower to much lower than last year, so you would say the yields should be lower to much lower, and then the government yields come out higher than last year. So I don't know what you guys think, but it's a very confusing issue. It makes you wonder why you even look at these or why we talk about them, but we do.
In our marketing groups, when we analyze some of those crop ratings and where we're at, it makes you wonder when the ratings are lower and the yield is going to be higher. And we've had severe drought in 3 states in the country and question marks in a few other states of some areas that are droughty. Is where does this corn yield come in at? And I'm not in maybe the 176 camp, but I maybe have backyarditis too. So.
Well, the government's supposed to be our leader. We're just trying to figure out what path are we going down? That's
right.
The question, yeah.
Plus, they ditched the old method of, okay, if you start out at a trend, it's 150 and it's a big crop, they'd go to 154 maybe in August, they'd go to 156 in September. But lately, the last few years, last August, they blew the yield way up over like 2.5, 3 bushel in soybeans, and then they ratcheted it back down all the way into January. So this year, they blow it lower in August, and now they jump it right back up in September. So are they just going to offset everything they did in August? We're right back to the July yields, the trend yield again.
You know, the one thing about it, though, we can blame COVID on everything, and that's it's a COVID problem.
Well, that's the one thing I was questioning too, is the acreage. We know what planted acreage is, but I think harvest acreage, especially on corn, especially up in this part of the country where we saw a lot of corn get chopped for silage or rolled into bales.
Right, harvested corn and wheat acres, I think, are going to be an interesting thing as we go forward. And where that comes up, we're probably going to lose a few acres that way, I think.
What about FSA coming out with
the leap.
acreage on spring wheat, or all wheat, I guess 2 to 3 million acres higher than USDA's been carrying a long time. That's planted acreage. And then the report comes out on Friday, and they didn't change it at all. So we still have a situation where FSA says there's 2 or 3 million and something like that more acres planted, reported to FSA already, and our numbers are lower than that with NAS.
Well, I wonder what's going to be up ahead in the quarterly grain stocks report, though, too. I know there's some information we didn't get in the last WASDE report, and I think wheat is part of that conversation.
If you look at the spring wheat in a typical drought year, though, like 88 and I don't know if 91 or whatever, there's some years in there, though. If you look at typical planted acres to harvested acres in a drought year, you know, usually it's 3 to 4% on a typical year. In a drought year, you can be 15 to 20% less that got rolled up or abandoned or not harvested at all. So where do they come into play, and does that offset the 2 million that they threw in there, or what kind of game are we playing? So.
Well, and the one thing I think, you know, Kara, you alluded to the stocks figure, and I think right now what you're really having is, we've always looked at the market this way. If the ending stocks are getting bigger, you know, it's hard to be overly positive on a market, and our ending stocks are growing on corn. You know, we're up to 1.4 billion on corn, and we're up to, what is it, 185 million on soybeans. And the September 1 stocks, which is going to be coming out the end of the month, I don't know what you guys are thinking, but we're thinking last year's soybean crop could be adjusted upwards 20 million bushels. So the ending stocks from last year go up to this one. I think the industry right now, you know, we may not want to talk about it, but hear about it, but they're kind of running for 21, 22, a 200 to a 350 million carry out on beans, and a 1.2 to 1.7 billion carry out on corn. So, you know, those numbers are, are not really bullish, but those numbers don't always have to be right either.
Mm-hmm. With that, then, how much, it all kind of depends on demand as well. How much demand is built into this market?
Well, look at it this way. We're on China's demand for next year. They're 9.8 million metric tons behind last year's purchasing price. So that's zeroing in on 36 million bushels short on their purchasing. So they're going to have to start to ramp up pretty fast to meet these government exports. And the government didn't change any of the exports with the Gulf problem, which may be okay. You know, it's early.
Yeah, I was talking to Frayne Olson, came by our booth yesterday and was talking about the damage to the Cargill facility down in the port, and he said it's not something that you could just buy buy a part for a John Deere. These are specialized equipment, and so to repair it when it's all rolled up in a ball like that, it's not something that gets done quickly.
You know, on the supply side, I think we probably have somewhat good numbers, but on the demand side, I think that's such of an unknown. I think that gets to be a bit of a scary thing. I mean, we've had tariffs and phase one agreements and all kinds of things, and are we going to honor those or not, and where do we stand with that? And so will that, you know, really make demand bump up, and will China come in and just get, you know, grab a bunch of soybeans, and where do we end up with that? But I think that's a bit of an unknown.
Well, and we did see cancellations. China did cancel some soybean purchases yesterday, but then again today we saw China come back in and buy again. Maybe not everything that they canceled yesterday, but a portion of what they canceled yesterday. How are we supposed to interpret that?
Well, I was just going to say, I think that they're moving to the P&W is what they're doing, canceling out of the Gulf, moving to the P&W. We've had every buyer that we sell to, ADMs and Bungies and Cargills, they're all looking to try move up as fast as they can, the beans that come off the field. I mean, basically, we're loading it from the truck to the rail car to get out to the P&W, and they're incentivizing that as much as they can. That's going to get ahead of this freight issue in the glut of harvest. So if they can get everything done early, that makes it a little bit easier as we go through harvest.
We talked about that when we were talking on one of the market reports. Does rail become the bottleneck then?
It can some years, but I think the Burlington Northern is set up this year that hopefully they're ready to go now, along with everything in this COVID era. Finding workers to maintain all of those rail cars and shuttles is an issue. So we'll see how they perform, but in a lot of cases, we can just blame it on the railroad for poor performance.
As China comes back in to rebuy some of these soybeans, what kind of strength could we see for basis up here in an area that would typically send out to the PNW? What kind of strength could we see in the basis?
Well, we're already seeing strengthening in basis. We're at zero basis on soybeans. We've never had a zero basis at harvest on soybeans. Usually typical basis on a normal year, whatever that is 65 under for us. So extremely good basis, opportunities to bring those beans in at harvest, take advantage of that basis. And if you want to sell them cash, do that. If not, even a basis delivered at harvest, potentially rolling that basis out to the next month for 10 or 11 cents to buy some more time is not a bad play on soybeans, just to bring them right in.
So what do I keep and what do I sell?
Sell it all.
Sell it all. Corn and beans.
But I'm a grain buyer.
Yeah.
But we did have a big change in the November-July bean spread. That's 8 months, same crop year. And at one time in the middle of the summer, just to tell you how we've lost some of the bullishness, November was 66 cents higher than July. So would you carry your soybeans for 66 cents or lose 66 cents to carry them for 8 months plus interest plus storage? Well, no. And so that's corrected now to where it's trading more like 20 cents. So, like you were alluding to, you do have a carry. It does give you a chance to roll out, make some decisions, hedge to arrives, think about it. I agree in the gut slot of the Midwest too, our basis is going to be tighter. Maybe not because of the supply, I think because of the producer is just locked the doors basically on the stuff that he wants to sell, at least in the gut slot of the Midwest. And I think part of it is because last year sold a little bit too early. So that's what we're seeing.
So at harvest spring wheat, we were anticipating about 2 million bushels delivered at the elevator, and we ended up getting 6 million bushels of spring wheat, which is a pretty big difference. But basis was also positive on spring wheat at harvest, which is again another anomaly that doesn't normally happen. The farmers, though, that did choose to put that spring wheat in the bin, it's going to take a lot for them to pry the doors open.
Yep.
Yeah.
A demand piece that Randy brought up was China and the big unknown. And I know they're still a really big player, but I wonder, do you all have thoughts what you think could happen when that phase 1 trade deal expires? What happens to China demand?
Well, I think that the Chinese are pretty savvy buyers, and I think they're going to try and buy from whoever they can. They're really sourcing, if you follow them, they're sourcing around the world a lot of different buyers. And it seems like they really are getting closer to Argentina and Brazil all the time than they are us. So I think I think after the relations we have, I think they're shaking stuff up around the world a lot. Not relying on one person, that's what I see.
One thing we haven't talked about too much is inflation, or the potential impact that inflation can have on everything. Our suppliers, machinery producers, automobiles, everyone talks about the impact COVID had, and they can't get supplies, so things are ordered a year ahead of time. And their suppliers and shipping is all up 10, 20% from past year. Some builders, a friend of mine that works for Bobcat said, basically they've raised their prices on the product 10%. You order it now, you won't get it for at least a year, and they've never ever done that in history. Yet we have our Federal Reserve Chairman saying inflation is just transitory, it will not endure, and the economy is gonna suffer later. Man, I don't know. We even had food, wholesale food suppliers saying their costs were going up 7 to 10% this year. We haven't seen it in a long time. So let's talk the impact of inflation. In Argentina, a farmer holds grain as an inflation hedge. So we had a grower that had 80,000 bushels of wheat in his bin last year, $4 wheat, and he held as an inflation hedge. It was like 2 years of wheat. You know, that inflation hedge really paid off this year, didn't it? Because we have $9 wheat.
As long as they sell.
As long as they sell.
And you had the cash to hold it.
We've had people that
might have to pay the bank.
We've had people that have held wheat for a number of years. If you clean the bin, the cobblestones are still there. So, I mean, they like to hold their grain in some cases. It feels safe and secure.
Yeah.
But you still got to take advantage. I mean, we put in some highs in the cash market on this wheat market. I think you should have taken advantage of that. So.
Just a reminder, too, we do have a microphone available. If you have a question you want to ask, feel free to ask and jump in on the conversation.
Typically in inflationary times, though, the dollar would get cheaper, would it not? And then we may see a better opportunity for export, too. So, I mean, I think that could be a potential part of the whole.
Yeah, because like you're saying, the dollar right now is like 92, and we had, a number of years back, 15 years ago, it was like 75. So that's a big difference when you're doing world trade.
Yeah, we've had 1 to 3% inflation for well over a decade now, and no one believes inflation will ever be an impact again. That's exactly when it is, usually, isn't it, in markets?
I wondered, can we talk a little bit about making some sales during harvest time, or a marketing plan, I guess, as we head into the harvest season? I know some farmers did not want to make pre-harvest sales because many really didn't know up here the kind of crops that they had. What should their strategy be once they get a handle on what they can actually produce?
That's a real difficult one. So we had really good opportunities this summer to sell this year's crop. And as the drought started to rear itself up and show its face, I think that dwindled some of those opportunities. But we also did have guys that put basis contracts, did cash prices, and now they're sitting there wondering, am I going to have enough crop just to fulfill what I have out there on contract? So they're in a little bit different of a predicament. Now, if you have grain to sell, $13 cash beans off the combine, $9 cash wheat still at the elevator, $5 cash corn off the combine, depending on your storage situation. I think there's some opportunity there. Low input cost for 21, so the margin's probably pretty good.
Well, I think if you look back over history, it was 2012 was the last time that we actually had prices that were really profitable for the producer. So it's been a long stretch getting to 2021. So I think when you really look at the historical, you have to ask yourself from a producer, and I think you probably all do, are we in a new plateau like prices like we talked earlier or not? Well, we don't know. So that means that you should take advantage of what you have. You've got carries in the market. New crop, even this year and next year, is still profitable for producers. And, in our mind, you don't necessarily have to make hard sales, but you can do some strategies that give you the flexibility to get some of the up and the down. But there's a gap on December corn at 477.5. Oftentimes those get filled. On the other side of it, the people that think the yield is going to be less and the crop's not there and the demand's going to pick up are actually thinking that we're going to make new highs again. So there's a big disparity. So that's the time that you look at some kind of risk management strategies. And you're going into harvest.
How do you guys to pull the trigger, though, on a management strategy when the last year and this year especially was the best thing was to do nothing until you were combined?
And then maybe you shouldn't have done anything last year because it took off after that. But I think they'll make those decisions when they know the bushels, I think. And I wouldn't say hold it all, I guess. I'm not in that camp that we go screaming way higher. Again, look at farm profitability. I think risk management's a big key part of it. You could do some strategies with basis being very, very good. You maybe cash it out and re-own it some way with a call or straight out re-own it. And maybe not all the crop, but a part of it. So.
Yeah, and I think what you're saying is take advantage of the structure of the market. If the basis is historically narrow, it tells you a signal to sell it, re-own it some other way. If there's a carry in the market, try to take advantage of the carry. If you have storage, get a return on your investment. roll your positions out to March or May, that type of thing.
Oh, that just makes sense. You talk about a 65-cent better basis for soybean harvest than you've ever seen before. That's 65 cents you could put in your pocket and buy a call option for 30, 40, 50, 60, and you're breaking even. And if it goes up $2, it's free money with no risk. So that makes a lot of sense. We had a basis offer on corn out west for plus $1, delivered at harvest. You know, the guy asked, should I take that? And we were wondering, do you really need to ask that question? Because you can re-own it. If you're bullish, you can re-own it in a lot of different ways, some low risk, like you talk about with calls, or take the risk and buy a futures. And if it's discounted, better yet.
With so much uncertainty in these markets, as we kind of look ahead to next year, should farmers be thinking about marketing some of the 2022 crop? I know we're still in this year's harvest, but I know some are already looking ahead to next year.
I think that's a serious consideration. In fact, I think we made a recommendation on some of that today. And in fact, in the last 12 months, we look back, and I think we've sold anywhere from 2.4 crop years in, I think it was corn, up to 3.65 crop years of beans in that 12-month period. So we had a lot of inventory going into that because prices were so bad. We thought there isn't much risk at 307 corn. But now there is risk at 507 D's 22 corn. And if we had told you guys last year, a year ago, when corn was 307, if you'll get an opportunity to sell $5 corn, what % of your crop would you sell if it's offered to you? And it's offered to you now for 22. And 21, I guess.
Right. With next year's, I think there's a little bit of risk management to do there too. With next year's inputs, fertilizer, last year a good corn blend in our area, $110 to $125. Next year's, with the prices that we're posting today, is $188 to $200. If it works in a budget and you buy the fertilizer, then you should sell some corn, I think, to offset that purchase of that expense. Our input. They're talking costs. I think on general, you could see probably a 25% increase in overall costs on corn, beans, and wheat. So I think it's managing that risk and that cost. And if it works really well in a budget, I think you should manage that risk and sell some corn along with buying that fertilizer. So,
Does availability, like if you're thinking maybe corn, as far as just even the chemicals, we're having trouble getting chemicals. How does that play into this?
well, some of the chemicals that we get out of China, and China's having a Winter Olympics this year, and I don't know if that's going to shut down some of their processing. And it sounds like next year it could be interesting just getting chemical alone. With nat gases prices screaming higher, they just made an announcement today that some plant was going to shut down because the prices were too high. So that offsets shut down plant, inventories down. All of a sudden, fertilizer prices continue to go up. So at a certain point, you just say, I'll wait and see what happens. But I don't know if that's the best.
Well, but when you have I think what we're saying is our break-evens are so high compared to what they were that you should try and look at some percentage as far as some risk management. Even you can even have some tight sales on and re-own it with some kind of a call option. I mean, cover both ends of it. You've got the tools out here to work with.
So I think we do have a question in the audience. If we could get a microphone down here to the front. You could shout.
What are your guys' thoughts on the energy end of things and fuel? Should we be buying fuel now and in the future, a year down the road?
Well, I bought all my fuel. I farm on the side too. I've got a family farm that we run. And I did last spring bought my needs for the next year already. And I don't know if it's too late. I think we're trading right around probably 280 or 290, which is higher than last year. But it looks like crude oil's on a little bit of an uptrend, and maybe it's not bad to get some of those needs covered as well.
Does anyone have anything else to add to that?
Well, what we're seeing clients do is they've been locking in their fuel cost, and just because they're not sure, what's going to happen, and it seems like an uncertain environment. It seems like it's, supplies spike, even more than you think sometimes. So that's what we're seeing, just from a ease standpoint, we're seeing clients do.
One other thing about supplies for inputs for next year, and for a while at my meetings I was talking post-pandemic. Well, I don't know if we're ever going to get post-pandemic or not, but farmers that are just-in-time inventory people, whether it's parts, whether it's chemicals, whether it's seed, I don't know if we can play that game anymore. I think we got to be planning ahead, maybe taking delivery of some of those products early so they're on the farm and we know we have them for that next year coming up. I don't want to cause a toilet paper panic, but I still think we need to be good planners for that next year.
I want to piggyback off a question that Randy had kind of hinted at, Randy Koenen, I should say, since we have two Randys on our panel today. I wonder, will 2022 be a bigger year for corn or soybeans, and then what happens to wheat? Especially given some of these input costs here.
One other issue in North Dakota, dry beans had an absolutely catastrophic crop because all the dry beans were done by August 20th when we got any rain. And so most of them are raised in the northeast and in the north central. It's an absolute catastrophe. And we started at $30 and for pinto beans, and they're at 45. There is no supply of dry beans. I mean, it's bad. It might have half a crop in the best areas. So dry beans are going to need to get more acres. And there's a lot of canola is at higher prices than they were in 2008 and higher than they were in 2012. And that's the November 22 futures is considerably higher than that. So canola is in a severe shortage situation. And Canada is they produce half of the spring wheat, half of the wheat in North America. So you've got a couple of other crops we haven't talked about today that are going to have to bid considerably for acreage. And, we have a problem. And durum is another crop that we have a real problem to deal with.
I got another one. As long as you're talking about that, could you touch on barley a little bit as well? Because there seems to be a push and pull between the dog food market and the maltsters right now.
Well, is there such a thing as feed barley this year? Because what do we 13.5 protein or less, and boy, does it matter what your protein is? There's going to be a lot of feed barley that's going to be, we're drinking feed barley this year, basically, for the most part. I don't know if what was the protein level of the crop in your area?
I guess I don't know the barley protein. We don't handle barley, but the wheat crop was excellent this year. I mean, the best quality wheat we've seen in probably 15 years. Excellent color. Protein, typically we'll take a 14.1 protein average in at harvest, and this year 14.7 protein. Test weights, 63, 64 pound test weight. So really good wheat. A lot of people were concerned about that quality and maybe being light test weight and whatever with the drought, but this year it was exceptional. So there's quality out there in those bins yet. So,
yeah.
You talk about acres, and I think, the one we're trying to figure out what we're going to do next year, but our big competition is South America, and so they're already started. They just this week, legally, they could start to plant soybeans. They started planting corn in the first crop earlier, but it looks like down there, their soybean acres are going to continue to grow, maybe like 3%, 4%, and their corn acres maybe stay the same. So they're trying to plant a lot of soybeans if they can.
Well, one caveat with that too, Don, is I read a lot of that new acreage coming into soybeans is coming out of pasture land. So what happens to their cattle? There goes their feed. So that would be more corn or more feedstuffs on the market to sell as well.
Yeah, well, and we know that Brazil had a drought basically on their corn, and that is a real issue. We don't realize, but Brazil's the second biggest exporter in the world. They export like 900 million bushels, something like that. They're buying corn from Argentina to get by. They have the largest cattle herd in the world. So when we were talking about shortages here, for the people that are talking bearish versus bullish, those are some of the bullish factors. Is the corn supply is tight, the canola is extremely tight, the wheat market is tight. China has a record corn crop probably. but what's it all mean? South America is going to be on the radar like you haven't seen for a long time. If they have a snafu, it's a La Nina year, which means southern Brazil, Argentina is supposed to be dry, so we'll see how it goes. But it's going to be starting on the watch list. I'd say the weather watch is switched, basically starting to switch from the U.S. to South America now.
And we've been talking about that at some of our marketing meetings too, that South America, they were at a 114 million metric ton crop down to a 87 million metric ton crop. That's a substantial amount of bushels. And Brazil likes to use ethanol too, so that could be a play for some ethanol from the U.S. and the market there as well. So I think they're on the big time watch. I mean, if it stays dry, that could mean we could see some interesting fireworks in the next 3 months.
And I think that's one of the reasons the producer, looks at it and says, well, these are nice prices, but, there's some things that can change that could make the prices really nice prices. So, I get it. You're just on hold, waiting to see how what cards come out of the deck here going forward.
What other questions do you all have out in the audience? Let us know. It's always fun whenever we have such great questions and good conversation up here. Let's talk a little bit more about South America. Is there anything else that's on the horizon in South America that we should be watching in terms of crop production that we haven't already talked about?
Last year they planted late, and this year if the planting gets late because of the dryness, that could infringe on that second crop corn again. I think that becomes a part of the watch for second crop corn. I know a lot of growers down there, it sounded like they were disappointed in the yields that they got, and they'd say, well, I don't know if I want to plant late second crop corn again. So, I mean, this thing could get interesting that way too.
Yeah, and I've traveled extensively through that area in Central America, South America over the years, and it's just such a different situation down there. I think you were alluding to Argentina, the inflation rate is so great that they really do look at their currency or their grain as a currency. It's so much different than we do here. They store it, they don't sell any, they sell just enough to buy inputs, and so they keep it. So I think a question mark is, can they really get, as the input costs go up, they're the same for everybody around the world. What are they going to plant? Can they get the supplies to plant it? Are they going to have a supply disruption? I mean, some of the roads down there, it's amazing. I mean, they're dirt roads coming out of these massive fields, and if you get too much rain, you don't move. So it's not the U.S. system at all. That's what I think a lot of times we forget.
That's a great point, and also South America has very sandy soil. It's very sandy. So their soils don't store soil moisture. Here in North Dakota, stored soil moisture is a very important component when we start our crop year. So that's something we're thinking about next year when we make our crop insurance decisions. But here in South America, the average rainfall is 60 inches a year in the south, and it goes up to 100 inches a year up in the Amazon or more. 60 inches a year, that's the lowest rainfall. We have, 14 to 18 inches annually in North Dakota. And look at Brasilia temperature. The average temperature of Brasilia in summer is a high of about 84 or 85. That's right in the center of the country, right in the soybean center of the country, production area. And the average low is 60. And the average temperature in their winter period, when it doesn't rain at all. Most of the rain also falls in 6 months that they produce the soybean crops. So probably 52 inches of the 60 falls during that 6-month period. So the rainfall that falls during the year is everything. We had a drought starting in the fall, but it continued to January, and it ended in January, and then they ended up with a little better crop than most people thought. But it never rains in the summer, and it never rains in September, and it usually starts sometime in October and November. So, I mean, the rainfall they get this year determines their crop, and the rainfall they got last year determined their crop. So to put too much emphasis on pattern from last year to this year, it's not like here where stored soil moisture is extremely important. Those rains we had this fall were extremely important to our farmers in this region because that helps their soil moisture.
Well, and their growing area is incredibly long. It's from like Canada all the way down into Mexico. So when you're talking about a different area, you really have to know what area you're talking about. It's different from north to south a lot.
Fly 1,200 miles from the southern part of Brazil and you're in the center of Brazil. You're not in northern Brazil.
Well, to clarify, what would it take to dissuade Brazil from planting more acres? What would cause them to kind of do a retraction of growing what they've, expanding on their growth?
In my mind, it would probably be an economic situation more than anything else, because some of the producers are so large down there. If they'd get into a financial problem, if they couldn't get supplies, getting supplies, particularly in Argentina, is really pretty tough. I had a friend down there that lives in Argentina, and just a side story, lawnmower that you buy here for $100, $200, down there was $800 to $900 just because of inflation. So getting these supplies in is really a tough one, in the cost differential.
Capital, yeah, you talk financial. Capital. If you're farming 20,000 acres and you want to expand 3%, and you said a 3 to 4% expansion in soybean acres. They expanded every year in the last 10 or 20 years. So I thought to myself, $8 soybeans last September 1st, and we have $12 new crop soybeans now, a 50% increase, and it doesn't sound like they're changing their expansion a whole hell of a lot.
No, they're looking at it as an advantage because that's their currency. It's just like, I just have more money.
Any questions, guys? Feel free to ask. Got one over here.
Ray, you kind of alluded to it about canola needing acres, some of these other crops. We talk about flax, oats, all kinds of things, dry beans. Are we going to see some of these farmers who have kind of tested the waters maybe transition to specialty crops? Or is that, and this is to all of you as well, is there a risk management part of that where canola is worth a lot of money, so maybe I should try canola and try to make that pencil out?
That's always possible. But generally, in North Dakota, we have North Dakota farmers in central and northern North Dakota. They're not just raising, corn and soybeans, 2 crops. They always have the machinery and the capacity to plant 8 different crops. So their mix of canola, wheat, dry beans, and barley, and all those other things, there's a lot of choices. And they can plant any amount of any of those. So whatever the market pays for, whatever you talk about risk management, when I add all my inputs and do my budgets, what I can make the most profit on, I commit my land to. Of course, they have other restrictions on work capacity and workload and all that.
It also goes a little bit to, if I haven't raised that crop in the past, what kind of insurance guarantee do I have versus if I have a good APH and a good guarantee on corn? How can I manage that against if I start a canola thing? It's nice to be on the cutting edge and get out there and try something new, but you also want to consider the risk management side of it and where that may fall. So I think that's an important thing to keep in mind.
Don, we saw oats make an all-time high, or not an all-time, but a contract higher in the overnight session. The old saying is oats knows. Can you kind of expound on what that means and what it...
Yeah, I think that's it. We always say oats is the leader because oats knows, because it's more of a commercial type of market. It's not really so much a speculative market. But like you say, Randy, oats knows. But I've had people tell me oats knows nothing. So I, so I think it can go both ways. But I think one thing you can say, well, when a contract is in contract highs, you have to take notice because it's a short crop. And you never know where it can stop. Oats trading a premium to corn is a big deal, sends a big signal. So you've got an oat supply that's tight. We talked about canola making highs; it's tight. So you've got a lot of these commodities that are pretty tight out here. But oats is one of the ones that fundamentally usually is a driver, and historically it hasn't been a bad indicator just because of the commercial players that are involved. It's not very much of a speculative market.
I think we have an audience question too. I don't want to cut into if someone else has a reply, but I did see a hand up out there.
Oh, no, I was just going to expand, kind of jumping back a question before the one Randy asked, but we talk about risk management and implementing other crops maybe into our rotation, or ones that we don't commonly see. We talk about fertilizer and those prices, and we know that spring rush of availability and just getting the supplies to where they need. Where does that fit into the risk management piece of a cropping plan? fertilizer?
Randy, I thought you were going to take that question.
Fertilizer is such an unknown. I mean, you go back to 2008, and it seemed like the industry was scaring people into buying the fertilizer because there wasn't going to be any, and you couldn't get any in the spring. So if you don't get your needs covered, get it done. And then all of a sudden, the housing market crashed in 2008, and the fertilizer market followed it, and things changed drastically by spring. I'm hoping that we can get fertilizer on the farm by spring. I don't know how you manage the risk. If you can't, that's maybe more up to the cooperative. But I also, go back to that. If you do buy it, offset with that sale. So,
How much of this market is driven by the speculative funds?
I think the speculative funds drive it higher and lower than it should go. So, I think there's a player, but I think we like that player.
Yeah, I guess I've always been under the assumption that the funds aren't really going to change a marketplace. If the marketplace is going to, if the soybean price is 13 and corn is 5, that's what it is. They help you get there faster. I don't think that they move us to a new plateau or anything, but I think they're, like right now, we're going into harvest, and we know usually harvest you come under pressure because of the supply. The funds know that too, but right now the funds are sitting like 70,000 contracts of soybeans long, something like 280,000 corn contracts long. So they're going into the gut slot of harvest, and apparently they feel comfortable. So, that's a positive sign.
I was thinking too, you talk about those funds traditionally in the speculative area of commodities, and then there are the transitory money. I remember in 2006, crude oil took off first of all the commodities, and that transitory money sat there. But they watched the crude oil, like maybe they're watching oats right now, run to new highs and blow out the old plateau. And money started piling in from the stock market, an area that typically isn't in commodities, piled into commodities. And it included the grains eventually. So 2007, 2008, we blew corn up from $3 to $8. That moved, and then the money moved out in 2000. Once we got those commodities doubled and things went up, an awful lot, the money moved out for a few years, and then a few years later it came back in, and we blew it back up to 2012 levels. So that movement, and we talked about the inflation assessment. Do we really have a serious inflation risk coming up? New administration, new policies, COVID, all the impacts that are having from that. So will that outside money, stock money and investment money, come flowing into commodities again? If we do, your whole concept, Don, I think of a new plateau in commodities could very well be here. That's when it happens, is when that outside money comes.
And you talk about, going back to Randy, your question, I can remember, I've been at this a while, since the 70s, but I can remember at one time we had the limit that funds could come in. One fund would be 600 contracts, then they went like to 1,200, then they went to 3,000, 6,000, then 12,000, then they said, fine, as long as you're all hedgers, you can trade as much as you want. So that's how it's went, and it hasn't really just, you would say, my God, if they can come in here, they'll blow corn to $20. But they don't do that. There's kind of a balance, So I think we've learned that they're kind of a friendly team if we use them right.
I was to a marketing seminar that Farm Broadcasters put on at the Board of Trade, and one of the guys there described his position. He said, I provide liquidity to the market. It was kind of an interesting concept.
I suppose he would be more of a spec trader.
Spec trader,
intermediary.
basically. Yep.
It's a little different now. They were in the pit before. Now they're just sitting at their computer at home.
How much has that changed what you guys do?
I think it's actually much more efficient for our producers because, in the pit, boy, I remember the New York markets, silver and gold, those were notoriously bad to get a decent fill. I'd put an order in and, run through my sell price, it hit it, I should have got filled. Oh no, they posted fast track trading 2 minutes before, so I didn't get filled with my 1 lot order, but those 100 lot orders, the guys in the pit, they always got filled. The New York guys, basically, I don't know how you'd put it, Don, but They took advantage of the small traders over and over and over. Now you got a computer that prioritizes those orders. My 1 lot order now is guaranteed to fill before somebody's 100 lot order. So I think actually the small trader has a considerably more even playing field now because it's electronically ordered in a structured format and there's no fast track trading posted.
Well, and I think that's true too. But Randy, I can remember in '88 when we had soybeans go like they were wild. We didn't have electronic trading, and I can remember, of course, it was a bad fill is what we call it. But the client went at the market, and it took so long by the time we called them. How the olden days was, you would call the pit. The pit would get it into the guy would fill it. If there's too many people backed up, it'd take him a while to find his guy, and all of this. But it was like 30 cents off, which is kind of a big deal. So now it's instantaneous. So I would say it's improved greatly.
I think so. Yeah.
Big impacts on report days where we start seeing this thing trade, immediately as soon as the reports
Well,
come out.
but you bring that up. Those report days are amazing. If you really watch that, even before the numbers come out, you see some huge moves. Like corn might go up a dime right around the report, back to unchanged, then down a dime, and then then you get the number.
Well, that's Clarence Speaks. He got the stuff out early or something.
That's,
From the trading.
I know. And I thought, oops, I made a mistake. I'm on the other way.
The other left.
Well, thank you
The
all.
other thing I'll say about
Yeah,
the report
go ahead.
days with the big swings, I encourage producers, if there's a number that's close to getting hit that they like, to put the order in ahead of that report because it can trade volatile during that time. If the order's in, you got a way better chance than trying to slide it in as that trade is moving rapidly. So, have some orders in place if it's close to your number.
That's a good point.
Well, panel, we are nearing the end of our time together today. Thank you all so much for joining us. And as we wrap things up, I thought maybe we could just go down the line here, starting with Don, and just share some closing thoughts on the markets, things you want people to take away from today's discussion, the big picture here.
Well, I think in the big picture, we talked about, are we in a new era? And, my experience since I've been at this thing 43 years is possibly, possibly not. But I would say until we figure out where we're at on everything, go to work and protect what you have through some good, solid risk management tools. There's a lot of them out here, a lot of them to use. There's a lot of good people out here to work with, and I would challenge you to touch base, look at that, look at some strategies, and see if you can take advantage of the market.
I guess I would echo some of those thoughts. And I always like to go back to very simple mathematics and numbers, kind of budget type thing. So, we're at 307 corn last year at this time. I look at that, I look at the historical range, we've been up at $8, $8.50. I look at that and say, boy, from 307, I don't have a lot of risk. I don't need to do anything to protect anything because there's nothing there to protect, really. But now when you moved up to 770 May corn, now you got a lot to protect. Plus, you had a discount going out. You were crazy to hold cash corn past May, really.
Yep.
It was crazy. It would be ridiculous. So now we're back to 5. We've got something to protect because we're a couple bucks above where it could be. Are you making money at 5? How much? And I like to not stick my neck out too far anywhere. But if I'm going to stick my neck out and make a whole bunch of sales, if it's at good prices, it's worth sticking my neck out for. And you could still get it chopped off. But at least you've got something that you're getting in return.
They both talked about risk management, and I think that's important. And I spent 8 years teaching farm management, working with about 40 different farmers. And one of the things I think on the farm that you should be doing is monitoring that cash flow plan. I do mine on my farm a lot. I mean, if not weekly, sometimes daily, looking at what the price is, how does that look, what's my return on the farm if I sold everything today. And I know that number. I don't know how many farmers actually know that number. So I think having a spreadsheet put together that can give you that information at a snap of a finger is a great thing to do. And then, you know, when there's opportunity in the market, like we have basis opportunity today and maybe a cash price opportunity today, I think take advantage of it. One of my golden rules that I have posted up on the board is that if we put in a 5-year high, excuse me, if we put in a 5-year high, sell something. You know, if it's a 5-year high and we haven't been there in 5 years, maybe it's time to sell something.
Well, thanks again for joining us. Could we have a round of applause for our panelists today? Thank you all for being here at the Big Iron Farm Show on the third and final day. Thank you all for who joined online. And if you're here in person, be sure to stop by and grab a hat on your way out. Again, this is the Red River Farm Network's Issues and Events Center at the Big Iron Farm Show.
Our thanks to Don Roose from U.S. Commodities, Ray Grabanski from Progressive Ag, and Randy Zimmerman from West Central Ag Services.
Yes.